Hello and welcome to Forex Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing what Forex actually is, and is it not just gambling? There's been an explosion in interest in Forex trading since the advent of the retail Forex market, which opened up after the internet was born. Much hype has been made of people making fortunes from Forex trading in the retail space. So, is it all true or just a fabrication? And is it really easy to make money trading Forex? Unfortunately, wherever there is money involved, there will always be fraud, and therefore you will find a lot of scams in the Forex space, within social media sites such as YouTube and Facebook and Instagram. People upload videos on YouTube telling you that they will help make you a fortune, and then of course they want to be paid for their education programs or perhaps trading on your behalf with your money, when in actual fact they are ill-equipped and do not care about making profit for you. They are simply out for your subscription fee or investment funds. The Forex world may conjure up ideas of easy money and wealth with flash cars, luxurious houses, and jet-set lifestyles. Is that the reality, far from the portrayal that many of these scammers would lead you to believe? In truth, the Forex market is a skilled profession. There is a steep learning curve to go through when understanding how this market and industry works. It is a very complex and extremely fluid marketplace. Over $5 trillion are traded every day, and this is interconnected throughout the financial markets with other assets such as stocks, bonds, precious metals, commodities, and oil. You would not strip a car engine down if you had not been to college to learn about car mechanics, and you would not attempt to build a house without first learning how to do so. The Forex market is exactly the same. You must learn about economics and the fundamentals surrounding governments' financial policies of other countries whose currencies you wish to trade in. You will need to learn how to look at trading charts in what is called technical analysis to learn how currencies, which are always traded in pairs, are moving against each other in order to successfully find trends and trade them accordingly. Therefore, the effort that you put into accumulating the relevant knowledge is the only way that you will be able to successfully and consistently make money in Forex. Once you have learned everything that you need to be able to trade successfully, you will then need to backtest your results and forward test them on a demo account before you risk losing your hard-earned money trading the marketplace for real. This means that there is no quick fix strategy on how to make money trading. Anything short of what is necessary means you will simply be gambling, and the Forex market can be deadly if you slip up. So how does the market work? The Forex or FX market is an international exchange that is uncentralized, which means that nobody is in charge of it. Currencies are bought and sold against each other in pairs. We have over $5 trillion being traded from Monday to Friday 24 hours a day. It is the most liquid business on the planet. There are specific windows when volume is higher than at other times of the day, and these are the best times to seek out currency pairs where traders look to latch on to trends because that is where the real money can be made due to increased volume going through these particular times. Just like any other commercial areas, fluctuations in currencies are largely driven by supply and demand. If you have too much of a product, it tends to be cheaper, and where a product is difficult to obtain, it becomes more expensive. This is true with currencies. So when there is a surplus of a particular currency, it becomes cheaper to obtain, and many fall against a particular counterpart currency. The opposite is also true. When demand for a currency increases and there are less sellers, in which case the price of the country's currency will become more expensive against the counterpart currency, and the value of the currency will therefore rise. So how do we apply this demand and supply scenario to the Forex market? Each time a currency is bought, surplus demand is created within the market, which subsequently pushes the price of balance and the price will rise. Each time a currency is sold, a surplus supply is created, and this time the opposite is true. It throws the market price off balance and pushes the price down. The amount of the price that moves up or down during these situations is dependent on the amount of volume going through at any particular time during these periods where extra volume is experienced during the busiest times of the trading day. Therefore, the biggest likely market moving generators tend to be central banks, large financial institutions, large hedge funds, sovereign wealth funds, and the retail sector has a much smaller impact on the price fluctuations due to the fact that they only make up a very small part of the Forex market. These constant price fluctuations in the Forex market is the main driver for how traders make money in trading. The economic events in the world are constantly changing, where governments' policymakers adjust their financial policies in relation to the swings in fortune of their countries, which affects their gross domestic product, and whereby economic data releases, which come out on a weekly and monthly basis. These are the main drivers as to why there are constant movements in price action pertaining to the balance of supply and demand for each currency. Because currencies are always traded in pairs, when trading you are betting on the value of one currency against another moving up or down based on an underlying supply and demand for each currency. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.